Hi there, my name is Gokey, and I am the creator of Candlestick Charting, which is a technical analysis app on the App Store and supports both iPhone and iPad devices. So today I wanted to talk about a technical indicator that's built into the app called Volatility Stops. This is sometimes also known as Volatility System. Now this is a great trend following indicator and was developed by a famous technician known as Wells Wilder. But before I get into it, one thing that needs mentioning. The volatility system really works best on trending stocks. Stocks that are trending sideways, this really isn't the best system. Now the app includes indicators such as ADX, plus minus directional indicators that will help you get a handle on whether a trend has turned strong or not. But I'll save that for a future video. So look out for that video as well. Alright, so let's take a look. So let's select a stock and turn on the volatility stop indicator. So here I'm going to select Blucora, which is here. Now Blucora has had a great run up in the last few months, and I think it would be a good example for a number of different reasons. Now as you can see, the daily chart shows up on the right and 6-day previews show up on the left with this app. And we can zoom out to different time ranges by just pressing these options here. 60 will zoom out to the 60 days, 90 days of different candlesticks. You can also choose weekly and intraday to get those kinds of time frames. Now to turn on volatility stops, simply just press settings and just switch it on. Now you can keep the defaults, take the 7-day average true range here, and 3 is the multiplier, and just click apply. And what you'll notice here is a number of circles appear below and above the candlesticks, and those have meaning. Now, the volatility system obviously uses volatility as its main component. Now, I'll spare you the details, but in a nutshell, the app calculates the volatility of each day using another technical called true range. And it averages these out. So it typically does 7 days of true ranges. And that is configurable in the settings panel. So there's the 7 there as part of this. And it multiplies it by a constant, which typically is 3, but that's also configurable. And the result is something called the arc. And the arc is the distance in which the stock price is allowed to move before hitting your stop. So if the stock price does move beyond your stop, it indicates a change in direction of the major trend. So let's take an example. Let's take a look at today. We'll go back to the 20-day. So you can see that if the stock price drops below this stop here, again, it indicates a change in direction of the major trend. And in this particular case, it indicates that this nice uptrend looks to be over. Now, one thing to note, the volatility system is actually pretty easy and to use, and it's actually very visual. You don't actually need to know anything about arcs or true ranges. And so let's take an example. Alright, I'm going to expand this a little bit to illustrate the next piece. Alright, so when we turn on volatility stops, all these small circles appear above or below the candlesticks. You can see them here. This particular case, they're all below the candlesticks. In this particular case, they're all above the candlesticks. Now the location of the circle, whether it's above or below, represents your position in the stock, whether you should have a long or a short position. If the circle is below the candlestick, it basically means that the trend is rising and your position should be long. If the circle is above the candlestick, it basically means that the trend is declining and you should have a short position in the stock. Now the circle itself is actually called the SAR, which means stop and reverse, which basically means that if the stock price, remember we went here, that if the stock price hits the stop, your position is going to reverse, stop and reverse. It's pretty much predicting the end of the trend, so reverse the position. Alright, so let's scroll back and try to take a real example of a change in trend. So you can see a great short opportunity which started to taper off back in April. Let's go here. You could see here, there's the great short opportunity, and you can see it starts to taper off right around in April. So we could double tap this and sort of zoom into this area and take a closer look. Now, as you can see, the SAR is above the candlestick on the 11th, the 12th, on the 13th, although we almost stopped out, the 14th, the 15th, and then on the 18th, we actually stopped out and reversed position. Now, you'll notice that also that when we did stop out, the SAR flipped. It went from the top of the candlestick to the bottom of the candlestick. Now, these are your new stops as we work our way up. Alright, so let's zoom out and head over to May. There's a couple other important points worth mentioning. So, I'm going to zoom out here. You can see May. We're going to kind of zoom in by double tapping into this area here. Now, given this technical uses volatility as its main component, you can probably guess as volatility increases, your arc expands and thus your stop moves further away. And as volatility decreases, so your arc contracts, thus the stop moves closer. There's an example here where you can see there's not much volatility, the stop is not further away. Suddenly we see a large move up, and in subsequent days we've got a decent amount of space between where our stop is until things begin to cool off again, and then the stop moves closer. Now, this is okay. When volatility increases, the system automatically compensates and pushes the stop further away. That is the benefit of the system. It takes volatility into account in its calculation. If things become very volatile and price speeds up, the SAR compensates and gives more breathing room for retracement. It could retrace somewhere within here. On the other hand, when the market cools down, the volatility decreases and the stop moves closer. Alright, so some final words. Don't let the simplicity of the system fool you. It is designed to keep the trader in the trade as long as the trend is intact. It allows room for retracement when things get volatile, yet it also set up to reverse position when the price has reacted enough to indicate a change in direction of a major trend, i.e. this area. So it really is a nicely designed system. But again, systems like this only work well in strong trending stocks. So it is important to understand other indicators such as ADX and plus minus directional indicators. So definitely stay tuned for this one as well. So final note, if any of this looks interesting to you, I'd like to encourage you to download my app. You can download it from iTunes by typing in Candlestick Charting in the search box. Your support means a lot. I have a zillion more things that I'd love to do with the app, but can only do it with support of users like you. So enjoy and good luck in your investing.